Hello and welcome everyone to this week's COT review. I'm Thomas from COTbase.com. Today we're going to have a look at the 7th COT report of 2018, but before I go into the review, please have a look at our new service, futurestradingguides.com. If you haven't yet subscribed, there's a free trial period that you can check out the service, but I'd like to focus your attention on our results page, which is new just a few days ago. It has changed, and here you can see the system's performance, not only for the previous trading day, but for any day, whichever you choose, or you can of course look at other data ranges as well. Here you can have a look at the probability targets, how the system performed, and you may see that in case of currencies, above 65% probability, all of the targets were met, so a pretty decent performance over there. Back to the COT review. Let's start off with the S&P 400, where we have this 43% change in commercials positions, the largest change in the past 52 weeks. So it is an unquestionable bullish change signal. The only question is whether or not this signal would be effective. Of course, that's hard to tell, but one thing's for sure, prices have moved higher, so it may be a little bit late for us to act upon, which does not mean prices shouldn't be able to go higher. I'm just saying that the signal itself may be a little bit late. If we open this 5-year chart, you can see that we've just moved away from this bearish extreme stage. So it was over there in the market for quite some time now without any major reaction from the market. Whether or not we're going to see this continue, meaning commercials decreasing their net short positions while large speculators decreasing their net long, that's the big question. The next market is the Dow, where we have this 39% change in commercials positions. Of course, we're not surprised to see a pretty similar picture as in the S&P 400. So there's this bullish change signal, possibly pushing prices even higher in the next couple of days. And this 5-year chart will show you that we've just moved away from the bearish extreme. Commercials down to 25,000 contracts net short, and large speculators 25,000 contracts net long. Palladium is our next market with a 31% change in commercials positions. Again, bullish change signal coming a little bit late for us. If you look at the market, you may see there was a decent rally in the past few days, so maybe this signal is a little bit late. If you look at the 5-year chart, you can see that the extreme is more or less in between the two, the bullish and the bearish one. The last major extreme was this bearish extreme early this year, which managed to push prices down, and that means we had this signal as an effective one. Moving on to large speculators COT Extreme, we will start off with the soybean meal market, where we have this all-time COT Extreme. Here we go. You can see that both commercials and large speculators are all-time extreme. We've never seen in COT history of soybean meal traders having such large positions. So commercials above 130, 140,000 contracts net short level, and large speculators very, very bullish about the market. I'm not saying this signal will push prices down next week because, of course, nobody can see into the future, so you have to be cautious. But one thing's for sure, the stress level has reached a level where we should be expecting a top developing in this market. Of course, you can always look at the charts and see how well the market reacted to these bearish extremes in the past, and if you go over these extremes, you may see that actually pretty well these were able to signal us a change in the trend. We're going to jump over indexes because the picture is pretty much the same as in Dow and S&P 400. We talked about those. Palladium, we talked about that. So let's jump over to lean hogs and see that 40 report extreme, which is not large, but just to show you something new and maybe teach you guys in analyzing the report. So we look at the most bullish extreme, which was back over here in 2015, and actually that was a pretty decent signal for us after this decline in the market, stopping lean hogs from further declining, pushing them a little bit higher from there. And the most bearish extreme, which was back over here in early 2014, and we're more or less in between the two, a little bit more to the bullish side actually, as you may see. So we could see further rises in this market. Last market for this review, corn, where we have this 26 report extreme, so really small, but still, if you open the chart itself, you can see that there is something to talk about. So we have this relative bearish extreme, and you can question whether these relative bearish extremes may be capable of pushing prices down. And you can see that actually in the past these were the majority of the times effective signals. Of course, these signals I'm showing you right now, where my cursor is, are more obvious and easily spottable extremes in the market. So that's all for this COT review. Again, if you have the chance, please check out our new service, futurestradingguides.com. And thank you for watching. Have a great weekend. Take care. Goodbye.